This third empire will focus on a metal that has been discovered in India. This metal is everywhere only if you could see it. It sits at the heart of your smartphone, tablets, camera, batteries, and even cars. In simple terms, this metal is the driver and the engine for the technology era. It could also dictate the future of a tech civilization. Not exaggerating, but we can't live without this metal. The discovery of this metal has created a lot of buzz. Let's understand the significance of it. While we talk about this, another news that has created a lot of global hype is the whopping order Air India made from Boeing and Airbus. Let's talk about why this is significant and how it can change India's aviation market. Another important topic is the current state of the Indian economy, which is my favorite topic as an analyst. Let's also discuss this. Let's begin. You're watching Informed Investor, the Third Empire, and initiated by ResearchAndRanking. Lithium is a metal that is used in many different things. It is a light silvery white metal that is so soft that you can cut it with a knife. Now, Reasi is a district located in the western part of Jammu and Kashmir, surrounded by snow-capped mountains and is known for its scenic beauty and serene environment. Now, the government last Thursday said it has found 5.9 million tons of lithium reserves in the Reasi district of Jammu and Kashmir. To put the size of the deposit in perspective, the lithium from the discovery alone means India will now have the fifth largest lithium reserves in the world, just ahead of the United States. Now, the vast majority of the world's lithium reserves are found in the lithium triangle that are Bolivia, Chile, and Argentina. Now, Bolivia has by far the world's largest lithium reserves, but most of it remains in the ground as the country does not have the developed infrastructure to excavate it. Now, due to this, Bolivia does not rank anywhere near the top in actual lithium production if you see the chart on your screen. Now, the big national news over the weekend was the discovery of lithium in India. Let's understand what the hype is about and if the celebration is justified. Now, critical minerals are like the secret ingredients in our favorite tech products and devices, without which we actually may not be able to function. Now, one such mineral is lithium, which is essential for the production of batteries used in consumer electronics, electric vehicles, and even solar panels. In a world where technology and clean energy are becoming increasingly important, critical minerals like lithium have become indispensable. Now, India unfortunately does not have its own lithium resources and relies heavily on imports. The country imported lithium worth 22.15 million in 2021, with Hong Kong, China, and the US being the top sources. However, with the increasing demand for clean energy and the rise of EVs, the demand for lithium is only going to go up in the coming years, making it a very highly valuable commodity. Now, this is where the recent discovery of lithium reserves in India becomes a big deal. It could be a game changer for the country's ambition to expand EV penetration by 30% by 2030. Now, by becoming self-sufficient in the production of lithium, it can reduce its dependence on foreign sources and ensure a steady supply of these essential components. Now, yes, the benefits could be enormous, ranging from boosting the economy and creating job opportunities to supporting effort towards energy security and sustainability. But it's not all sunshine and rainbows just yet. Now, while the discovery of 5.9 million tons of lithium is definitely a cause for celebration, we are not quite sure if it's economically viable yet. You see, there are three levels of resource standards: inferred, indicated, and measured. And unfortunately, the lithium in Jammu is only at the inferred level, which is the lowest in terms of reliability for estimating a mineral deposit. So before we can start mining this precious resource, we need to wait until it reaches the measured status. But that's not all. Building the infrastructure for mining, processing it, and converting lithium is a complex process and that will take some time. And in the meantime, we'll have to rely on imports for our lithium needs. Now, this isn't the first time India has found lithium deposits either. A few years ago, there was a similar buzz when 1,600 tons of lithium were discovered in Karnataka. But the AMDR had to remind everyone to take a chill pill because without the proper technology to extract lithium, the benefits of the exploration might not be realized. So while we are definitely hopeful about this new discovery, let's not get ahead of ourselves just yet. We've still got a long time to go before we can start using this lithium to power our electric dreams. That's not all. The third challenge is the impact of lithium mining on the environment. Now, as we know, mining leads to habitat destruction, soil erosion, and water pollution. At the same time, it requires massive amounts of water. As per its estimates, it takes approximately 2.2 million liters of water to produce 1 ton of lithium. Now, since it is an energy-intensive process, it contributes to greenhouse gas emission and climate change. In the pursuit of a more sustainable future, lithium has emerged as a key player. However, the mining process that extracts this valuable method from the earth can have an impact on the environment. As India aims to establish itself as a lithium superpower, the question of how to balance the benefits of lithium with the environmental costs is a major challenge that cannot be ignored. Just as a captain of a ship relies on various instruments to navigate through rough waters, investors, policymakers, and analysts like me rely on a country's macroeconomic indicators to navigate through an unpredictable global economy. Now, these indicators serve as a compass that guides us through the ever-changing economic landscape. Now, they can tell us whether a country's economy is heading towards calmer waters or rough seas, whether it is expanding or contracting, and whether it is healthy or in need of assistance. So let's look at how the Indian economy is recovering by looking at some macroeconomic indicators. One of these indicators is inflation, which is when prices of things go up. Now, inflation, which has been a major pain for the global economies and the stock markets. India's retail inflation ran above the upper tolerance limit of 6% for the first 10 months of 2022, but fell below in the last two, largely because of a fall in food inflation. But retail inflation yet again ran above 6% in the last month, that is January. Now, food price inflation, which accounts for nearly 40% of the CPI basket, rose to 5.94% in January from 4.19% in December. Now, when we also look at the core inflation, which excludes volatile food and oil components, this too is about 6%. Now, we still see inflation being a concern because there are several factors driving it. Credit growth is integral for the economic growth of any country. It is a crucial component of any country's economic growth as it stimulates investment, consumption, and overall economic activity. Now, despite the current high interest rate environment, bank credit growth has been strong for the last couple of quarters. Fortunately, deposit growth has also been slowly catching up, which is important because banks need a stable source of funding to support their lending activities. If one looks at the broader data, deposit rates are now slowly inching back to the 11% mark. Now, PMIs are indicators that point in the direction of future activity in the manufacturing and services sector. In terms of the PMI, a reading above 50 indicates expansion and a print below 50 indicates contraction. Now, PMI for manufacturing and services have been on an upward trajectory for the last couple of months. Now, this shows that the service providers and purchasing managers are quite optimistic of business activity maintaining the upturn. The rate of expansion eased from December, but it remained sharp and above its long-run average. Now, a key area of weakness seen in the latest PMI data was exports. But when we compare it with emerging countries and other advanced countries like Brazil, China, France, Germany, Japan, the UK, and the US, both services and PMI index ranged between 44.6 to 52.9, much below when compared with India's. Now, the wide divergence between India and other countries is one further metric that highlights the different outlook on the Indian economy. Now, let's talk about another one of the key economic indicators, that is the IIP. Now, Index of Industrial Production or IIP as it is commonly called, is an index that tracks industrial activity in different sectors of an economy, such as manufacturing, mining, and electricity. Now, led by an unfavorable base effect, the IIP growth moderated to 4.3% in December 2022 from 7.3% in November. But IIP exceeded the pre-COVID level by a healthy 7.6% in December. Moreover, a healthy growth over the pre-pandemic level was witnessed in all three sectors. Now, this shows that industrial activity continued its momentum. However, going ahead, it will be critical for the current growth momentum in the industrial sector to be maintained due to macroeconomic headwinds. Weakening external demand could remain a drag for the industrial sector. Now, one indicator that has been consistently robust is the GST collections, crossing 1 lakh crore since October 2020. At rupees 1.56 lakh crore, the GST collections for January are second only to the record rupees 1.68 lakh crore collected in April 2022. Now, the latest number means GST collections have now exceeded the rupees 1.4 lakh crore mark for 11 months in a row. Now, this can be attributed to tax reform measures, improvement in economic activity, but also high inflation. Now, auto sales have seen some resilience in the past few months. The underlying demand trends for the industry has continued to remain stable. But January auto retail data was slightly a mixed bag, with two-wheeler sales still lagging. On the back of global headwinds, exports have remained muted. In January, merchandise exports declined for the second straight month year over year due to adverse external conditions. But our service exports showed a robust growth, leading to a trade surplus. With major economies staring at slowing economic growth rates and surging inflation, India's domestic demand and rapid infrastructure development are insulating its economy from global recessionary pressures, though not completely. Because when we look at some macroeconomic indicators of the country, it is bright but also a bit dark. Now, major high-frequency indicators like GST collections, power demand, railway tonnage, domestic air passenger traffic, and passenger vehicle sales, they've all exhibited resilient strength. Now, while domestic fundamentals of the country are strong, most risks are currently emanating from external factors. Because when we look at export-oriented sectors, we see a slowdown. However, even in the face of these obstacles, India is expected to maintain a growth rate of 6 to 7%, making it one of the fastest growing economies in the world. As equity investors, it's important not to get too caught up in short-term headwinds. Now, India's ongoing infrastructure development, PLI schemes, Make in India and Startup India initiatives, digital evolution, and many other initiatives all bodes well for its long-term growth story. But of course, favorable external factors may be difficult to come by in the near term. It's essential to focus on the bigger picture. The recent developments of Air India have undoubtedly been a fascinating journey. Now, this showcases the intricacies of the aviation industry and the ever-changing nature of this business. Now, with the Tata Group back at the helm, Air India is undergoing a transformation that is set to have a significant impact on the Indian aviation sector. Under the new management, Air India is undergoing a makeover, including the merger of its low-cost subsidiary Air India Express with Air Asia and the merger of its full-service airlines Vistara with Air India. Now, this consolidation of Tata Group Airlines is actually one of the largest mergers in India's aviation industry. Now, the news that's making a lot of buzz is that the airline has agreed to purchase 250 Airbus jets and 220 Boeing planes, surpassing a deal for 460 planes by American Airlines in 2011. Moreover, the recent order of 470 commercial jets from both Boeing Company and Airbus is yet another milestone in the airline's journey. It marks the largest deal for commercial aircraft in aviation history, and it signals the company's determination to stay ahead in the highly competitive airline industry. Now let's talk a little bit about how the Tata deal would change India's aviation market. As we mentioned, the Air India deal broke all records when it placed the largest ever aircraft order in global aviation market. Now, the sheer size of this new order indicates Air India's desire to dominate in India's aviation market. Now, the deal will likely increase competition in the domestic market, where it will take on market leader Indigo. India's domestic market is currently dominated by Indigo. The airline boasts a fleet of over 300 aircraft, the highest in the country. The Tata Group's total fleet size includes at 219, including Air India's 113 aircraft, Air Asia India's 28 aircraft, Vistara's 54 and Air India Express's 24. Now, the Tata Group, which currently boasts about 27.2% market share, is currently looking to increase its market share in the domestic aviation space. The Tata deal for Air India is also significant because it has the potential to elevate Air India to the level of other large global airlines. Now, this could also draw attention to India's aviation markets, which are looking to capture a significant share of the global business. So, you know how when people travel from one country to another, they usually have to take a long airplane ride. Well, right now, a lot of people who want to travel from India to other countries choose airlines from the Middle East because they're popular and have good service. But the Tata deal could be a strategy to reclaim a portion of trips between India's major cities such as New Delhi and Mumbai, which are currently dominated by foreign airlines like Emirates. Now, India has become the third largest domestic market in the world, behind only the United States and China. Now, with this shows that more people are choosing to travel by air than ever before. The domestic air traffic has also again picked up pace during fiscal year 23. To support this growth, India has also been expanding its airport infrastructure, with the number of operational airports nearly doubling in the past 8 years. The government is also planning to develop and operationalize 220 airports in the next 5 years. Now, with the Air India deal, other domestic carriers may also make similar announcements to keep up with this rising demand and competition. Now, furthermore, the agreement made in the purchase of Air India are not only important for the airline's revival, but also highlights India's position on the global stage and its relationships with France, UK and the United States. Now, see this experts to know that the purchase of Air India has garnered attention from around the world, with leaders from the US, France and the UK, countries that are home to major aviation industry players like Boeing, Airbus and Rolls-Royce, welcoming the commercial benefits of the deal for their industries. Now, US President Joe Biden called the agreement historic, and British Prime Minister Rishi Sunak said the deal would create new jobs for UK. Now, looking ahead, the future of the Indian aviation industry is bright. The sector is expected to see significant growth in the coming years, particularly in the areas of international travel. But challenges remain, like high operating costs such as high fuel prices, infrastructure limitation, intense competition and regulatory challenges. Also, while having ambitious plans and goals is a positive thing, the ultimate measure of success is profitability. The success of Air India, like any other business, is determined by its ability to generate profits, and the company's ambitious plans will require careful and flawless execution to achieve this. However, the profitability record of Tata-owned airlines has been inconsistent. In addition, the domestic airline industry in India is highly competitive. On the international front, Air India faces fierce competition from global players like Emirates, Qatar Airways, Singapore Airlines, Lufthansa and British Airways. Now, these airlines are likely to become more aggressive in their pricing, products and offerings, making it all the more important for Air India to engage in forward planning to stay competitive and profitable. In summary, while having ambitious plans is positive, success will depend on effective execution and the ability to adapt to the changing market realities. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.